Hello and welcome to the 7th of our CIMA P3 Performance Strategy lecture recaps. This one is on fraud and ethics. Fraud, first of all. Who is responsible for preventing and detecting fraud within an organisation? Well, management will have some responsibility here. Firstly, to safeguard the assets of the business and to prevent fraud. Internal audit will have responsibility, firstly for detecting fraud, and secondly for ensuring that systems are in place to detect it. So procedures, firstly for preventing fraud. Well, you've got to have a strategy in place to prevent fraud. It may follow the COSO framework, and it says that you've got to have a strong control environment within the organisation. You've got to undertake risk assessments. You've got to have control activities to prevent fraud, and you've got to communicate these throughout the organisation. You've then got to monitor this framework to make sure that it's performing correctly. This will all lead to an anti-fraud culture within the firm and is likely to prevent fraud happening. Another aspect to this is having strong internal controls. These again will lead to the prevention of fraud occurring. So, detecting fraud. If frauds have actually happened, how can we detect them? Well, we'll be reviewing internal controls, so this will give us an idea if frauds are likely to happen and therefore enable us to detect them if they do happen. What are the indicators we should be looking for? Well, a few would be a large suspense account. This would be an indicator that there's a potential fraud. If information is always late, things are done late, and nothing's ever done on time, this is another indicator that there's a potential fraud. And also messy work that you can't follow will give you an idea that potentially there's a problem with it. This brings us on to whistleblowers. And whistleblowers now are protected under the Public Interest Disclosure Act 1998. And what they're protected for is if they make a qualifying disclosure. Now, qualifying disclosure must fulfill three criteria. First of all, there's got to be a reasonable suspicion. It's got to be a suspicion of malpractice, and it's got to be a suspicion that it has or will happen, i.e. that a fraud has happened or will happen. Under those circumstances, whistleblowers get protection under the Public Interest Disclosure Act 1998. If there is a fraud, how should we respond to it? First of all, there's got to be a fraud officer responsible for responding to fraud within the organisation. You've got to contact management and HR to start disciplinary proceedings. The audit committee will be informed. They will review the fraud and they'll instruct internal audit to undertake an investigation. You may also get some external advice. You may talk to your legal team or your auditor to try and see what they feel about the situation. And you've also got to inform the police and the insurers if you have made losses. So if there's a suspicion of a fraud, how do we go about investigating it within the organisation? We've got to make sure that the evidence is gathered impartially. You can't taint the investigation. It must be fair. You've got to establish the facts and the cause. Those are very important. You also might want to check, has there been any collusion with other employees? You'll have to quantify the loss and inform the insurer so you can make an insurance complaint. And then you're going to report on the fraud. And that report will look at the causes of the fraud and how it can be prevented in the future. So those were procedures around fraud. This brings us on then to ethics. Now, CIMA have their own ethical code, and it's based around 5 principles. First of these principles is integrity. You've got to act with integrity, i.e. you've got to be straightforward and honest. You've also got to act with objectivity. This means there should be no bias, conflicts of interest, or undue influence. You've also got to act with professional competence and due care. This means you'll have to keep your knowledge up to date, CPD, and you've also got to act with diligence. Confidentiality. You've got to keep the client information confidential. Now there are a couple of exceptions to this, so you keep it confidential unless it's in the public interest or you have a professional duty to disclose the information, maybe under legislation, money laundering legislation or something like that. And lastly, under the principles, you've got to act with professional behaviour, and that means not bringing the profession into disrepute in any way. So those are the 5 principles, or 5 ethical principles. So let's look at some threats to these principles. Well, firstly, you've got self-interest threat. Now this is if maybe you have shares in a business or you have an interest in the business. There could be a potential for you to act in an unprofessional manner to preserve that self-interest. Self-review. This is simply when you're reviewing your own work as an auditor, you may be reluctant to highlight problems or errors. Familiarity. This is if you know the managers or owners of the business too well, have become too familiar and are reluctant to highlight errors or fraud. Advocacy threat is where you become too involved in the business and you are willing to promote their interests, possibly to the detriment of the profession. And lastly, intimidation threat. An intimidation threat is where you are simply intimidated by management, by either physical intimidation or the threat of adverse publicity. So do we have any safeguards to these threats? Firstly, we're going to have our CPD and learning. You're going to make sure that your knowledge is up to date and that you know exactly what you're doing in all situations. Corporate governance codes must be adhered to ensure that the ethical threats are minimised and that the principles are upheld. If they're not, you may potentially find yourself with a CIMA disciplinary action against you. But strong internal controls can safeguard against a lot of these threats, so you've got to make sure that your internal controls are strong and in place. So what if you find yourself in the midst of an ethical conflict, perhaps at work? Well, the first thing you've got to do is investigate the facts so that you're 100% sure of what the conflict is. You could identify the ethical issues that are involved. Firstly, inform your line manager, inform the guy directly above you. Then inform senior management, or ensure that your line manager is informing senior management. If this is not working, you could potentially ask for advice from CIMA, and they will advise you on the best way to proceed. You may also inform the external auditor if you feel that there's a malpractice or fraud occurring within the business. And as a last resort, you may consider resignation. So that was our lecture on fraud and ethics.